Here we are in 2020, standing at the edge of the most exaggerated, fastest growth in the stock market in history. The central banks have put it all on the line. The value of the currency, their reputation, and their very existence, and the financial system itself. Sadly, most people can't even pay attention to read history, let alone a few videos online to teach them why the madness never ends well. But I guess it does end well, just not for the general public. You came here for the truth, so let me unveil that for you. Today we're going to look at what's going on in the stock market. I want to look at a few indicators today that may have a few light bulbs going off, and then I want to show you what's been happening within the economy as well, and I will connect these two together. It's important to take a look at these statistics. We're going to continuously measure them, we're going to keep track of them, and see what happens. I wanted to begin by looking at the Fed's balance sheet versus the Treasury debt. The Fed's balance sheet being the green line, red line is the Treasury debt, and clearly they're both going in the same direction. Here in 2020, especially over the last few months, we have seen an acceleration in both of these, and that is never a good sign, because if we were to look at this in comparison to the GDP, which is supposedly the economy, and we know about the statistic, but the rate of growth is way smaller than what we can see when you look at the Federal Reserve's balance sheet, for instance, in the fact that it has really rocketed higher, and the expectation is that somehow these two have to converge or at least be closer together. It's never going to happen. Now, the rate at which they're expanding the balance sheet has slowed down, but still, if they're buying billions of dollars worth of garbage every single day, there's no possible way the GDP is ever going to catch up, specifically since we just had a major contraction. You also look at the Treasury debt and see and understand that this is unsustainable. This debt here, although I keep hearing about it, there is no maximum to what the government can do, because they are the be-all end-all. They have the petrodollar, they have the money printer, so there's no stopping them. However, there is an issue, and that is spelt with 3 letters: taxes. Taxes will, in fact, be the biggest problem for the average individual, because how do you pay for it all? If you want to use your friends at the Federal Reserve to simply monetize it, then you create inflation. The inflation will not show up in the CPI. The inflation will not show up in the core PCE rate. My goodness, these are so heavily manipulated, and you will not see the inflation there. Perhaps, I mean, it could be possible, but the majority of it isn't going to end up there. When we look at inflation, we could see how it asynchronously affects different aspects of the economy and the markets and so on. It only really makes matters worse in the end. Money supply growth versus the Fed's balance sheet growth in QE regimes. On the left-hand side, you are seeing QE 1, 2, 3, 4, and you can see the dates that are here, just giving you an idea of where this has begun and ended. And then we see the Federal Reserve's balance sheet change in terms of billions. Very clear. I know you've been paying attention. The fact that right now, QE 4, QE 5, whatever you want to call it, the maximum expansion that we have seen with the balance sheet, we're talking about trillions of dollars being added in such a short period of time. M1 change also surpassed what we're looking at in the previous instances, but when you compare the M1 growth over the Fed balance sheet growth, right now it is not as big as what we saw during QE1, but things have changed, and certainly this is not over yet. We are watching just the very beginning of a crisis. This could end very well. Oh yes, the Federal Reserve printed a whole bunch, the debt has escalated dramatically, but they're going to fix all the problems and get everybody back to work. That's right, we're going to have sub 5% unemployment rate in no time at all, because everybody's getting back to work. That's what I keep seeing. Oh yes, everything is fine. The economy is reopening now. Every person is going to get their job back, and there will be no issues whatsoever. I can talk about other fairy tales as well, but I prefer to stick to the data. Left-hand side, surge in credit growth in the US. Look at this on the right-hand side of that chart. It is unbelievable to see this spike. This is the new borrowing as a percentage of the GDP. Of course, we've seen these loans that have come out every single corner of the government. They've been handing out money left, right, and center. On the right-hand side has historically been reflected in higher GDP. This is the credit impulse with the darker blue line. The lighter line says US private domestic demand growth, which has come down as we have seen the credit impulse coming up. This is not a good sign, but of course, what they like to note here is the fact that we're coming out of a crisis, people need to borrow, the expansion of credit is a good thing for the economy, so let's celebrate it. Same situation for Europe. Credit growth surged in Europe too. And this is just showing you what has been happening. Credit flow over the GDP, massive, massive increase. No difference from what we had seen in the United States and basically every other country. Right-hand side, and has historically implied a pickup in GDP because borrowing a lot of money makes the economy go, or rather grow. Well, this is what they tell us, but I've got a difference of opinion. This is an article that I wanted to look at because it really highlights what we've been seeing here with the markets, the valuations, and so on. The liquidity injection that the Fed is introducing to the market is actually being tapered off. And I would be very cautious with my words here because they are expanding at a rate of 120 billion just between the treasuries and the mortgage-backed securities. If you compare that to what we saw during, for example, QE1, this is historically high. Now they are printing less money each day than they were at the peak, but somehow we are meant to believe that it's not much being printed. I would disagree. Without another burst of Fed stimulus, Mills is concerned the recent rally is on borrowed time. Quote, the stock market has already discounted a significant degree of the economic recovery, so incrementally improving data here might not do much to lift prices. The risk reward isn't great here. So he's saying that the market has come up significantly and that's all due to the Federal Reserve. We know that is the case. But without better data coming through at this point, not just little points here and there, he's saying that they need some substantial information coming through. Without that, he's suggesting that at this point here, it's kind of hit a ceiling. I don't know what to expect. But certainly, he makes a good point. If it's all based on the Federal Reserve and how much money they're printing, if they're tapering off, that's his words, that's not a good sign for more growth to come. Moving in opposite directions, you could see the S&P 500 performance versus earnings estimates, and essentially they are moving in the opposite directions. Stocks are discounting an environment that is not necessarily reflective of not only economic fundamentals, but earnings fundamentals. Quote, highest multiple that we've seen since the tech bubble. Of course, this is huge. This is ridiculous when you see this going way off into left field, and yet we're being told that it doesn't matter anymore because the Federal Reserve is there printing. To a certain degree, that's absolutely the case, but there is always going to be this ceiling that's there with technical analysis that they tend to pick it up, they tend to trade on it, and guess what? The algorithms that are trading basically everything today, almost all trades, particularly in the United States, are taking place by algorithms, and they use this information. They go based on the technical analysis, and they're looking for some new data, some new information, or some new money printing. Assuming that we maintain current levels around 3,100, that is 26 times trailing PE, price to earnings multiples at the end of the year. For context, that's the highest multiple that we've seen since the tech bubble. It's just showing you here that things are exaggerated. That's all I'm trying to say. And this is ultimately what we have to face every single day. It's ridiculous. Stimulus options create election season quandary for Senate Republicans. More spending could speed the recovery, but it could also alienate conservative supporters. That's right, conservatives. I don't know if spending trillions upon trillions of dollars and bills being passed with flying colors can somehow be regarded as conservative. Nobody is a conservative. There's the smallest handful of people. Everything gets passed all the time. I thought this was really interesting. US banks are, quote, swimming in money as deposits increase by $2 trillion. There's a quote, if you go further down in this article, that says something like they have so much money they don't know what to do with it. These are the banks, for goodness sake. It's crazy. But of course, people are concerned right now. So for those who have money, they're stashing it in every place they can. In some places, I've noted that they're going to the safe deposit boxes. Other people are buying safes to keep the money at home. We can see that they're putting it in their bank accounts. Money is ending up in the money market funds. There's a lot of cash right now because of the uncertainty. That's all for this video. If you found it informative, hit that thumbs up button. When you do, you are supporting me. I want to thank you for that. If you want to check me out on Instagram and Twitter, I've got information every single day. So definitely do so at The Money GPS. If you want to learn how to sell stuff online, you can do so for free. I created an e-course for everybody to be able to actually produce themselves an income. Highly recommend it. TheAmazonGPS.com. Wait a second, don't go anywhere. Have you read my 2 books yet? If not, I know I'm a relic. I know this is so outdated, but reading books might be cool to some. If you want to check them out, link in the description, audiobook at themoneygps.com. Thank you for staying until the end. Have you watched this video yet? It has performed very well. A lot of people are interested in it. And if you haven't watched it, definitely click on it. I'll see you there.